But another stock that impressed with its numbers was Muthoot Finance. The net profit is up 56% and the NII was up nearly 30%. George Alexander Muthoot, the managing director of Muthoot Finance, has joined us. George, can you start by telling us what was the numbers in the bad loan area? Did you all have to increase your GNPAs? Do you see it as temporary at all?
The demonetization effect definitely had its negative impact in the last 3 months, but now from this month onwards, that impact is not there. Cash is readily available in plenty at all our branches, so we are back to normal. In this process, in the last 1 quarter, we should have grown by about 4%. We did not grow. So probably over the year, in the last 9 months, we have grown by 11%. So ending the year, we should be reaching about 14 to 15% AUM by the end of the year.
Okay, that's
so what about AUM? But there is a positive change which is happening in the company, which is about the diversification into the group business. So we actually have 3 subsidiaries with us now, which are doing fairly well now. One of that is our the earlier one, which we had, the Sri Lankan one, having a assets under management. It's a vehicle finance company in Sri Lanka. It has a 360 crore book. And we also acquired Bazaar, which is the microfinance company last year. It also has a book or AUM of microfinance of 450 crores. And the home finance, which we started, our own, Muthoot Home Finance, also a subsidiary of Muthoot, it's now reached 204 crores. So overall, we have reached about 1,000 crores of other than gold loan business, which is about 4% of the total blended AUM, which we would like to take it up to 10% and 15% in the next 1 year and 2 years.
Okay, got that, George. But just a word more on your GNPAs. They rose from 2.2% to 2.92%, and yet your provisioning has come down from 17 crore to 4 crore. Why that?
Provisioning has not come down. The provisioning is... we had excess provisioning. We had NPS, we had excess provisioning last 2 quarters. So we did not put any extra provisioning. Even now we are over provisioned.
Okay. What is it, 90 days or 120 days?
120 days.
Okay.
So you spoke about how the AUM growth for FY17 could be 14 to 15%. On an average, what can we expect in the first part of FY18? Because the growth over the last 5 years has been extremely volatile for the company.
Yeah, next year also we should see overall the year-round growth should be about 15% plus. And probably in the first quarter, 4% to 5% should be there in the first quarter of next year also. So hoping that there is no more upheavals in the economy and the market.
Okay. What's the sense you're getting in terms of the loan growth this year? You said what will be the full year AUM growth?
Yeah, we should expect. We have already grown by 11%, so we should reach 14 to 15% by the end of the year. That's what. In fact, we would have reached 19 and 20%, but probably because of the demonetization effect, we lost some business, some growth, etc. So probably 14 to 15%, which I think is decent for this type of this year. Should be what the AUM should reach in the next year.
Finally, what is your net interest income in the quarter gone by, and what may be your average net interest income for the current and next quarter? Will it fall because of the rise in market rates?
No, there's no rise in market rates. Actually, the cost of borrowing has actually come down only, and our actual cost of borrowing is much lesser now, and it is now in the range of 8.78%.
Are we looking?
The recent one which we are getting very good rates from the banks or NCDs.
Okay. Are we looking at any net interest margin compression in the second half of that is in the last quarter of this fiscal?
No, I don't think we should see any net. We have about 10% plus, and I think we should be able to maintain that.
All right. We'll leave it at that. George Muthoot, thank you very much for joining us with those details. So 15% AUM growth expected for the year, and NIMs should be safe because the banks are lending cheaper. We take a break on that note, and we'll get back our tech gurus yet again.